Welcome to ShortView Trading. This is your morning market hit for Monday, 26th of April. What matters today and this week for traders? Well, it's a big week. There's plenty going on in markets, not least the Fed announcement on Wednesday, 7 p.m. London time, followed by the press conference at 7:30, where the focus is no doubt likely to be on the possible timing of an announcement of QE tapering, especially given signs that inflationary pressures are building and evidence that the US labour market is healing nicely. If you look at job openings, for example, they've accelerated pretty rapidly and therefore employment is expected to pick up sharply. And last week we had the lowest weekly jobless claims number since the pandemic began. We also have Biden speaking this week on Wednesday, a joint session of Congress laying out a bit more detail on his American Families Plan, how he expects to fund it, including detail on capital gains tax. You'll remember this is very much the news flow from last week. We had that wobble in the S&P, we went back down to the intraday lows, and of course we've since nicely recovered from that little wobble. Nonetheless, the detail on the tax plan will be watched closely. We also get earnings this week from a number of key tech companies, Microsoft and Google tomorrow, Facebook and Apple on Wednesday, Amazon on Thursday. That'll be key for the direction of the tech-heavy indices like the Nasdaq 100. You can see it's chopped sideways in the past week, but the index has, broadly speaking, remained above its February highs, shown with the black line on this chart. There was also a bullish key to reversal last Wednesday. We'll see this week just how relevant that was. What's interesting about the Nasdaq is that while it's moved sideways since mid-April, downside put protection in the index has increased. This is the Nasdaq put to call ratio. It moved lower on the chart towards buy levels, suggesting there's some fuel for a resumption of the rally in the Nasdaq over coming trading sessions. So where does that leave us? How are we trading this equity market? We'll have a look at our daily trading publication. It's available on the website to subscribers. We also offer a free trial for 7 trading days. And in that publication, we make a 1 to 2 week long or short US equity market recommendation. The view is really driven by the positioning of our short-term models. So we're watching those very closely. We're also watching the behavior of a number of major top-level asset prices, including bond yields. You can see bond yields have rolled over in the past couple of weeks. Currently, the 10-year Treasury yield is testing its 50-day moving average. Will it break lower? If it does, that will drive strength in key tech areas of the market. So we're watching that pretty closely, as well as the dollar. That was your morning market hit and your Monday outlook for the week. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn, and/or Facebook. Thanks for listening.